Welcome to XYPN Radio, where your host Alan Moore brings you into a community of fee-only financial planners who want to profitably and successfully serve Gen X and Gen Y clients. If you're ready to get the knowledge you need from leaders in your field, learn from forward-thinking advisors, and take action on your own goals, XYPN Radio is the show for you. Here's your host.
Hello and welcome to this episode of XYPN Radio. I am your host, Alan Moore, and I'm excited to have XYPN member Morgen Rochard, founder of Origin Wealth Advisors, a fee-only firm based in New York, on the show today. Morgen started her firm back in 2014 after spending the first part of her career as a trader and then wealth manager at a broker-dealer. She discovered fee-only planning in the Level 3 CFA course and decided to ultimately launch her own RIA. The first couple of years were a real struggle, and she eventually realized that the struggle was due to her selling investment management without really knowing or offering financial planning. She signed up for her CFP, and after passing the exam, her growth has been fantastic. She has hit the point where she's able to decide if she wants to continue growing or really double down on the business and stay solo. One interesting conversation we had towards the end was her advice to women who want to start a firm but also want to start a family. Her advice certainly applies to women and men, but it's something I think a lot of female listeners in that position will benefit from hearing. Fun fact, what do many financial advisors have in common? They're often terrible at doing their own bookkeeping, and more importantly, they don't enjoy it. Enter the Bean team at FA Bean Counters, powered by XY Planning Network. There's no shame in falling behind in your books. We're all guilty of that from time to time. But if you're leaving money on the table because you haven't filed expenses correctly, you need the Bean team. Start cleaning up your books with a free chart of accounts template. Visit www.fabeancounters.com/XYPN radio to download your copy today. You can find any of the additional resources that we mentioned during the episode at xyplanningnetwork.com/178. Also, be sure to go to xyplanningnetwork.com/VIP to join our private group just for XYPN radio listeners. It's the community of advisors we've all been looking for that's there to provide support when we need it the most. Best of all, it's free. I encourage you to check it out. Again, that's xyplanningnetwork.com/VIP. Without further ado, here's my interview with Morgen. Hey, Morgen, welcome to the show. Thanks so much for being on.
Thanks, Alan. I'm really happy to be here.
So for listeners' benefit, can you give me sort of an overview of you and your practice? Where are you located? How many clients do you have? Any particular niche market? And then we'll dive into the details.
Yeah, sure. So I'm currently based in New York. My firm's name is Origin Wealth Advisors. I have 28 families right now, about 17 million under management. My firm has been around for 4.5 years, so I'm kind of an old timer in the XY crowd.
You are. That's exactly how old we are. So,
yeah, people always ask me, "Oh, are you like a founding member?" And I always say, "Oh, no, like I literally didn't know about XY, and I wish I did because I think that my life would have been a lot easier when I started my firm." But that said, you wouldn't have taken me because I wasn't a planner at the time. So we can get into that a little bit more. But my my firm is a financial planning practice focused on two different niches. The first one is young professionals or people who are about to start a business who want to retire early. And retire early, I use that term loosely. Like, I don't really think that people can wait around and play golf or do whatever they want for the rest of their life. Like, it really is work by choice and work for the passions that you have in your life rather than, working for the man, so to speak, or whoever somebody considers the man. And then my second group of people are just busy New York families, high income earners. Money seems to fly out the door. They don't know why, they don't know how, and just like getting their financial situation together.
So do you see any similarities between those high-income families or just the fact that they're high-income families living in New York sort of provides that common thread of issues that they're dealing with?
Yeah, so I would say the majority of the high-income families, the reason why they found me to begin with is because they were interested in retiring early. And maybe it's not necessarily in the cards for them because of where their spending is at, but it doesn't necessarily mean that they have to work themselves to death to do everything for their children. So a lot of the reasons why people work with me is because I really do focus on behavior change in addition to financial planning. It's not just handing a plan across a desk and being like, okay, you do these 7 things that I tell you to do and you'll be great. It's really more about those are symptoms that we definitely need to address and that we do address in my practice. But it's about long-term behavior change and things that my clients can do over time to really get themselves in a good financial situation.
That is definitely something I want to talk more about. When you say retire early, so there's been the big FIRE movement, financial independence, retire early, which, there's two sides of that coin. There's the, basically be so frugal and earn as much money as possible so that you can retire at 40 or 45 or whatever the number is. There's pros and cons to that. The con that I always see is just go get a job that you love enough that you don't want to retire. So I guess what are the conversations that you have with those clients around, why do they want to retire early? And could that be solved with a career change, or is it more to it than that?
Yeah, for sure. I think that it's specifically difficult in cities with high cost of living. And unless a client is willing to move cities, which is usually not something that gets talked about right off the bat, but unless they're willing to move cities and work remotely or do something like that, it's pretty hard for them to see a situation where they can take less pay and still be able to provide for their family. And I've seen this over and over again, especially with my New York clients, just because cost of living here is just so damn high. And it's just really hard to make ends meet and then to also put away money. So a lot of my clients, they are making $325 or more per year, and they're not really saving that much. And the reason why is just because the spending is so high, and it's not necessarily it seems crazy maybe to somebody who doesn't live in New York that how could that person not be saving money? But when they have a couple of kids, they're paying for childcare, they have an expensive apartment or mortgage or something like that, there's actually not that much left over. So it's talking about controlling some of the fixed costs so they can put away enough money so that then they can take a lower paying job later on that they enjoy, and also get some income, let's say, out of their portfolio for that.
Yeah, I remember people said the fastest way to feel rich was move to South Dakota, where the cost of living is ridiculously low.
For sure. It's something that my husband and I talk about all the time because we live in Brooklyn, and we're in a similar situation for sure. And we wonder sometimes maybe just life would be easier if we didn't have such high expenses.
Come on out to Montana. We're our housing prices are not cheap, but everything else is, so it works out. So yeah, I mean, when you're working with a client in New York, I remember there was was it Money Hoarder, the blog that put out a thing, and it was where $1 million or maybe it was $1.5 million of income goes in New York. And reading down through it, the expense numbers were just absurd. I mean, they were paying, as much for daycare as I pay, for a mortgage for 3 years. Why do people spend so much money in New York? Is it truly just natural cost of living is that high? Or is it a keeping up with the Joneses and you really can cut costs if you choose to?
There's certainly a combination of both. So depending on where you live in the city, for sure, there's just high cost of living. That said, do you need to have an apartment in the middle of Manhattan that overlooks the park, or not even overlooks the park, but just has enough space for you to have your entire family there? I don't necessarily know, right? I guess at that point, it starts to become what's really important to you. So if having a really small commute is important to you, then yeah, your cost of living is going to be pretty high. That said, that doesn't mean that some of the other things in your life you can't cut. So especially related to food costs is something I talk to my clients about all the time because it seems like such a necessary line item. Oh, I can't cut. I have, this $20,000 grocery bill, or I go out to dinner because it's easier. And it's those things are definitely lifestyle choices. And honestly, everything in New York is a lifestyle choice. We can always move for sure.
Being there is a lifestyle choice.
Yeah. I think that as soon as people are willing to take a little more agency for their lives in general and realize that everything that they do is a choice that they're making and they're not forced to do any of those things, that's when it starts to open up and they start to really see that they can make changes in their lives. So it's actually one of the number one thing that I talk to about clients is really taking ownership and agency for your life. Because if you just go through life being a victim of costs and being a victim of everything going on in your lives, you're not going to be able to make any changes because you think that everything is out of your control.
I love that. I feel like that's probably the greatest value add you're giving your clients is that even if they no longer are working with you, at what point they take ownership of their financial situation, that's game changing.
Yeah, I totally agree. And it's funny, it's definitely not how my business started. And we can talk about going way back, how everything sort of evolved for me. But the more I am doing this and the more I work with clients, the more I see that as the number one value add, and also something that's just totally irreplaceable. It's just not something that tech can provide. It's not something that you can do that outside of a one-on-one setting, really. I mean, you can do some of this stuff in groups, but it really does help to have a personal touch and somebody to be accountable to who will like put your feet to the fire when you need them to be, and kind of hold your hand through the process.
And it's the part that as CFPs, we get absolutely zero training on how to help clients with.
Oh, definitely.
Which is my own pet peeve. It's like the most valuable part of what we do is helping clients, with behavior change. And yet like none of us actually know the science behind that because there's a lot of it. All right. So before we tangent onto that, because we probably will, let's go back and just talk career paths. So how did you, go to, end up owning your own financial planning firm?
Yeah. So I think my story is pretty different than a lot of the other XY members that have been on this podcast. So I started as an equity options trader on the floor of the American Stock Exchange when it first existed. So very fast money trading, obsessed with the news, like had all sorts of trader speak, had the jacket and the badges and everything, yelling in a crowd, that kind of a thing. And I did that for a couple of years, and it seemed like the writing was on the wall that it really wasn't in the cards for me to stay there. And the firm itself was having some issues. So I begrudgingly took this wealth management job at Merrill Lynch back in 2010. And I only did that because there weren't any trader jobs in 2010. And I should back up. I started my career in 2008. So my first job I got right before Bear Stearns went out of business.
Perfect timing.
And it was like, oh my God, do I still have a job? Like I was watching CNBC and like the price going to zero. And yeah, sure enough, they were like, don't worry, like we're not really paying you anything, just show up. Which was true. They were not paying me anything when I first started.
Was it just straight commission, basically?
No. So I started like as an intern / coffee girl, and I just learned from the guys on the floor. They taught me all sorts of stuff. Like when I think back on it, it's actually amazing that I got my start as a derivatives trader, just because you just think in a different way. Even if it's not something I use in my practice now, you have to think one step beyond, because it's not just about like the price action that's happening in the market. It's also about like all the other different factors that cause options prices to change. So I think that in and of itself was a good enough education for me to just think a little bit differently about just finances and really anything in general, just because you have to think one step beyond. But that's a whole other story and tangent. So from there in 2010, I took this job at Merrill Lynch. I was working for a large financial advisory team, not planning team. We had all Mexican clients, and I was hired to do trading and analysis for they had $3 billion or something under management. And within Merrill Lynch, I switched teams to a smaller team with all African clients. And we did like all sorts of Forex trading and other like really cool exotic stuff. And during this time, I started studying for my CFA because I thought I was going to be like this awesome portfolio manager. And like, that was my dream, like to be the like hotshot portfolio manager. And obviously that's not what happened. So my team moved to UBS, and I spent another 2.5 years at UBS, finished my CFA. And then like things really started to change for me. Like I actually learned about fee-only financial advisory, not planning, from taking the CFA curriculum. In the third level, they have a tiny little section on fee-only financial advising. And it's all about like investment policy statements and honestly like stuff that's really not actually important to majority of clients, but the CFA says it's important, so it's important. But yeah, so I did. And then I had sat for level 3 next to this guy, and we got to talking just because you have some downtime in like when they're looking at your passports and other things in the test. And we got to talking, and I didn't really even think anything about it. Just took the exam, went home, passed, felt great. And then went to the CFA event and saw him there. And this is while I was like, kind of like, okay, I have to do something with my career. I can't like be on this financial advisory team forever. He said he was opening up his own registered investment advisor. And I was like, oh, you could do that? I mean, all I Googled about RIAs was like were these big firms or these family offices. Like I didn't know that it was something that just a single person could do. And I thought about joining him, but like it really didn't make sense. The economics he was putting in front of me didn't make sense. The economics that I saw from the new financial advisor program at UBS didn't make any sense, even less sense than joining somebody's RIA. And I thought like, well, if that guy can do it, like I could do it, which I know is not like the best reason why to open a business, but that is how mine went. Yeah. So yeah, after that, like I hung up the phone with him after telling him no. And then I just like, I Googled how to like own an RIA and found RIA in a box. And they gave me like these boilerplate docs and got me registered. And then like the journey began from there. So that was in August of 2014 when I actually was registered and gave my 2 weeks notice at UBS and left to start my own thing.
Wow. Talk about a whirlwind from 2008 to 2014.
Yeah. What's great is I got a really good education. And I know like the market's only gone up since, so I haven't really felt what it felt like to go through that. But I do remember '08 very well. I remember 2011 very well. So yeah, I feel like while I haven't gone through it with clients in my own business, I do feel equipped to handle it emotionally and mentally.
Yeah, and I feel like you were in it long enough to learn a lot, but not in it so long that it dissuaded you or sort of, I guess, sent you down a different path. We don't see a lot of folks coming out of that world. If they've been in it 20, 25 years, they're probably not coming out of that world to be a fee-only financial planner.
Yeah, definitely not. And you know what it is? It always rang true with me that you would get paid for your advice and not for like selling products and stuff. Even if I saw it happening all the time at UBS and at Merrill Lynch for sure, like I didn't like what was going on, and I didn't like it from the beginning. And I definitely had conversations with like their compliance teams about things that I was being asked to do. And they were always like, oh yeah, it's fine. But like, there's something, when things just don't feel right. And for me, it didn't feel right.
Okay. So you had a ton of options, right? Like you're clearly intelligent. You had the designations, the experience, you had a passion for doing financial planning. Starting your own firm versus like you had more options than just, join some guy's firm, take UBS's crappy offer, start your own firm. Or did you not feel like you did? Like, did you not see or not know about all the other opportunities that, you could have pursued? Or was this just like clearly the one you wanted?
I think it was a combination of both. I definitely didn't know what was out there, I think as much as maybe somebody who came from the fee-only world did. I don't think I realized just the vast number of firms out there and who would have hired me, just because a year or two into my practice, I got like 6 job offers. So, and at that point I was like, well, I already started my thing. Like, I don't need you. I needed you, 2 years ago. But yeah, I think if I had done a little bit better in researching, I probably would have found something. But I was pretty focused on like the portfolio manager stuff, and all of the jobs I applied for were like to be like in a like managerial role within a mutual fund, something like that, where I was actually analyzing individual companies and like doing all the stuff that we obviously are not really doing for clients now and don't think we should be doing for clients. So, and yeah, I mean, I'm happy to talk a little bit about how I ended up going down the financial planning route and getting my CFP.
Yeah, absolutely. The one note I wanted to make was you say it in jest. I had the same experience. Was the fastest way to get a bunch of job offers is to start your own financial planning firm. It seems ridiculous, but I hear this all the time from folks that are like, yeah, I just can't really find the right opportunity. They start their own firm. I'll call them the begrudging or accidental entrepreneur, where, they didn't set off to be a business owner. They set off to do planning the way that they wanted to do it. And then all of a sudden the job offers flowed in. And as a business owner, I guess it's, I don't know, maybe you've proven yourself by taking the entrepreneur leap. I love people who used to be entrepreneurs because they see the business a little more holistically, I think, than folks that have only been employees. So there's probably a lot of psychology behind that. But yeah, so it's the most risky opportunity, but you want a job, start a firm.
It's so true. Yeah. And I think honestly, I was always meant to be a business owner. When I look back on what my career looked like and how I handled things, I definitely now, like with a little bit more wisdom, not that I'm wise, I'm only 32, but I mean, 7 years ago, when I was at Merrill Lynch, like I definitely could have been more tactful in how I handled things. I thought I knew better. I thought I knew how to do things in a really good way. And I just didn't know how to go about doing it. And I think one of the amazing things about being a business owner is that like you get to do things your own way, right or wrong, you still get to do them. So it's kind of nice.
Yeah, it's kind of interesting how some of us were built to be business owners and some of us were just not built to be employees.
Yeah.
And I'll admit, I was always on the latter side. Like I just didn't do well as an employee, but I didn't really see myself as a business owner really until the last year and a half, something like that I finally was like, oh, I'm a business owner. Like I have team members that, I have to take care of. I don't know, sort of a mental shift for me. But if you're out there and you're unemployable, like many of us in XY, welcome to the family. So,
Yeah,
what
for sure.
get you down on your path to do comprehensive financial planning? Because you learn a little bit of it in the CFA. I think the CFA, especially level 3, exposes you to the world of financial planning a little bit more than just, I guess level 1, level 2. But you have your CFP. So, when did you get that, and sort of what set you down this direction?
Yeah, sure. So my firm opened in 2014. I didn't have that many clients. I think by end of 2014, I finished out with 7 clients. So it was good for sure. But like most of them were kind of friends and family. It wasn't really anything like that groundbreaking. I think I only had one real client who like wasn't part of my immediate network. And then 2015 was a really hard year for me. I only got 2 clients that entire year. And like I would get prospect meetings, but they were falling through. And at the end of 2015, I like specifically remember this. It was super cold in New York, and I trekked into my office that I normally paid for just like them to get mail. I trekked into the office and rented like an expensive conference room because I was meeting with this really important woman. And I was like, I have to get this account. I have to get this. So we get in there and she starts asking me about a profit sharing plan. And I literally I didn't know what that was at the time. I didn't know. And I was mortified, and I definitely handled that meeting wrong. And she knew I didn't know what I was talking about for sure. So I sent her a follow-up email, of course, but nothing came of it. And that night I signed up for the CFP.
Fair enough. We say that to folks, and it's easy to say it as a CFP. We're like, no, you need the CFP for the education. But people are like, oh no, I can learn it on my own. And you can go learn all this stuff from Google. But that's a great case in point of like when you get put on the spot, it's like, have you been exposed to this? And if not, you could go learn. You could be a expert on profit sharing plans more so than anyone with a CFP, but have you been exposed to it enough to at least sort of be able to feel your way through a meeting? So that's a pretty powerful story about that.
Yeah, for sure. And it's funny, like when I was in sort of career transition, I was still at UBS. I had a conversation with my uncle at the time who he always gives good business advice. So I called him and he said to me that if I wanted to be in the financial advisory world, I had to be either really good at raising assets or I had to be really good at performance, right? And producing returns for clients. And at the time, he's totally right. If I wanted to stay in the standard financial advisory world and wealth management as my parents' generation knows it, those are the 2 things that you absolutely have to do. And when I started my firm out, with an active portfolio and basically positioning myself with the chartered financial analyst, as somebody who could beat the market. And I don't think it's possible. I mean, I know that it's possible for some people to do it, but I don't think it's possible to do it for extended periods of time. And it was wasting a lot of time. I was spending more time evaluating companies than I was going out there and getting clients. And I wasn't focused on the things that clients actually need, which is financial planning and behavior change.
Now, I just want to commend you on being able, 1, to make that shift, and 2, to be able to admit it, because I'll say that sounds like a small shift of oh no, I'll just go from investment management to financial planning. You might as well be going from legal to accounting. We quote unquote do them both, but those are 2 very different service models, very different value propositions, very different sales cycles, and just everything you do is different. I'm assuming now that you're doing financial planning than you were doing investment management. And I don't mean to say one is right or wrong. It's just making that shift is huge.
Yeah, definitely. And you know what? As a result of it, year 3 for me, so 2016 was a hard year because it was me letting go of a lot of the investment management principles that basically held true throughout my entire career. It was the reason why I took the CFA to begin with. It was very difficult for me to relinquish control of that and to be accepting of the fact that I can have passive returns and that they'll be better at, honestly, than what they would have otherwise been if I tried. And then really focusing on the things that clients needed. But once I did that, the doors just opened for me. And when I was at XY Live, the conference, you put up numbers of what people's, year 1, 2, 3, and 4 look like. And my numbers don't really look like that just because I wasn't doing financial planning at the beginning. So years 1 and 2 were just me, I guess, going around telling people that I was this investment manager. And I wasn't getting any traction. I didn't have any kind of niche. I wasn't focusing on anything. I was going to take anyone who had any kind of money. And that's just not how you grow your business.
Do you have the numbers in front of you for expenses and revenue in those first couple of years? Because you said you had 7 clients by the end of 2014, 9 at the end of 2015.
Yeah, so I have all those numbers. I actually put down my revenue numbers for you, and I can just give you a good idea. I know expenses kind of off the top of my head. My year one revenue is 14 grand. I took a loss that year because I think I ran about 30 grand in expenses between setting up the firm, getting a new computer at the time was a big deal. I was still using my laptop from college. I had some other expenses. So I think I ran a loss that year. Year two, I had 67 grand in revenue. So that was just from having assets from taking on the clients. And I was managing about $6 million at the time. So like those numbers kind of match up. The thing where it gets kind of weird is year three, I had about 67 grand in revenue again. And that's because I took the CFP in March of 2016. I got married in July of 2016. And then I didn't really start taking on clients like as a financial planner until September or October. And as you know, like with the way you get, if you do quarterly debits of clients' accounts, like it's all in arrears. So I didn't actually get paid until January of the next year. So Year three was flat. Yeah. Year four. And then along the way, like expenses have crept up, but I'm still at a run rate. I'm at a run rate now of around 50 grand a year plus like health insurance. And that's like a whole other story. But yeah, I've been running anywhere between about 40 to 50 grand of expenses per year. So year four, 2017, I ended out with 105 grand in revenue. And then year five.
Huge jump.
Yeah, huge jump. So just by adding my CFP and adding like good financial planning, I took on a lot of clients in year three. I ended the year with 22 clients. A caveat there, and I'm happy to talk about this, is 7 of them were not right for me from the start. And I actually ended up having to get rid of them in 2017.
All right.
And we can definitely talk about that. And then this year I'll end out, unless I take on anybody new between now and the end of the year, which is totally possible, I will end out with around 146 to 150 grand in revenue. So good growth.
That's 60% and then 50% growth over the last 2 years. So that's huge.
Yeah. And now I have 28 families. This year I lost 2 and I had to fire 2. The year before I had to fire 7. So I've definitely had
fired 9 clients in 2 years.
Yeah. And you know what? They were always wrong from the start. And I'm actually embarrassed that I even was in that situation. Like I think we actually talked about this at XY at the live conference. You mentioned that you know somebody who fires a client every single year. Mm-hmm. And you really shouldn't be in that situation. And there are a number of reasons why. Like I always know before I take on a relationship that it's not right. There are red flags. And if you choose to ignore them, you're just going to end up in a situation where you have to get rid of them.
Can you give me, without identifying the people, can you give me some of those red flags, like the things that you saw that you ignored and wished you had paid attention to?
Yeah. One client, I had her from the beginning, really. And because I needed a client, she got me down very far down with a discounted price, like so far down that it was impossible to recover from. And I'm happy to talk about where my fees are now. And also, like, she did have cash flow issues, which was one of the reasons why it did take me so long to end the relationship, was because like I truly felt for her and I wanted to help her. But in the end, like it just, I couldn't keep her on as a client. And it's kind of it's a pretty big red flag actually when people are negotiating with you, like heavily negotiating with you at the beginning. I would say
that's a good point. That is a good red flag to pay attention to, is just like heavy negotiation, because they probably aren't seeing the potential value in what you're offering because they're so focused on the price.
Yeah, exactly. I couldn't have said it any better myself. And then the other 7, the 7 who I took on in year 3, who I had to fire in year 4, this is actually kind of sad how this all worked out. And one of my friends who I've known for a long time was like a great referrer and kept referring people to me. And I felt like I had to take these people on just because like my business was growing. I didn't have that many people yet. And that like, it was really nice of him to do that for me. And they just weren't good fits. They weren't financial planning clients. They weren't even really investment management clients like the ones that I had been taking on to begin with. They were just like some IRAs who wanted to be invested in hedge funds. And it just really wasn't what my business was about. And it wasn't where I wanted my business to go. And that was a mistake I made early in my career, and probably something that planners can learn from. Like, you don't need to do things that don't feel right. And you don't need to do them just because you think you need to take on some money. Like, I honestly feel like it's better for you to go out and get a part-time job than it is for you to take on the wrong clients.
That's a heck of a statement, because I 100% agree with you. Just because they hold you back so much because of the emotional drain. It is time consuming a lot of times, but so many times the wrong client are just an emotional drain. Like, you dread the phone call. It takes all day before you call them back because you just have a knot in your stomach. Like, I don't want to call them back. And that's really tough. And I would argue that there are some red flags that are universal, probably, talking about value, or constantly talking about pricing of services and that sort of thing are probably universal. And then there's also some that are just like very individual. I just remember, if anyone ever brought up investments, in terms of investment returns or anything like that in the prospect meeting, they were wrong fit for me. That doesn't mean they were wrong fit for all advisors. And there's probably some advisors that would be wonderful for them. You sort of have to learn your red flags. And that just takes time and practice and seeing who you're a good fit with.
Yeah, I couldn't agree more with that. I would say also, if you get a feeling in a meeting from somebody where like they're telling you stuff that's really beyond your capacity to help, and I mean this even more than just finances, like, because people come to us and they really share everything about their lives. And if you feel like in that moment that that's not somebody that you can legitimately help, you don't take them on just because they need help. Like, you try to find them other help.
Yeah, and it is one of the beautiful things that I have so loved about XY is that we have a very strong cross-referral network, especially those that tend to dive into niches, that they tend to cross-refer people that don't fit their niche. And that's what's really exciting, because then everyone can work with a smaller group of clients that's really an ideal fit for them, instead of everyone having clients that aren't the best fit. And, if we just sort of shuffled the clients around, we'd all have the same number of clients and love them. Which is kind of cool.
Yeah, for sure. And like, the last thing I definitely want to say on that is the number one reason not to take on clients who aren't a good fit for you is it's really hard to get rid of them. Like, I didn't like any of the conversations I had to have, and they were all difficult, and they don't get easier. They actually get harder because like, you form relationships with people, and the longer that they're in your firm, the harder it is for you to actually say goodbye. And they end up being people that you learn to love, and the conversations are just so difficult.
Do you mind if I ask how you have that conversation? That is not something I experienced in my firm. But I know a lot of advisors listening are thinking like they have that client in their mind that they're like, yeah, if when I hit a certain revenue number or do something, I'm going to let that client go. How do you communicate like this isn't working?
Yeah, so I found that it was always better to do it in person with somebody that you've been with for a while. For clients that I hadn't been with for so long, I just sent an email and I explained the process and why I was letting them go. And for those people, it was really because like there was DOL fiduciary rule issues at the time. And I did use that in my email, even though they also weren't a right fit for my practice. For the people who like they had been with me for a while, we were doing financial planning. They were part of my core practice. I felt like it was better to have in-person meetings or at least a video call where I just explained like, hey, we're not a good fit anymore, but that doesn't mean that I'm letting you go or I'm going to leave you high and dry. Like, here are the things that I'm going to do to help you in the meantime. And these are a list of people who I've already spoken to about just some of, not the specifics, but just a little bit about your situation and who would be very happy to take you on as a client. And I found people on XY Planning Network who were willing to take clients who I no longer wanted.
Doing it graciously, I think, is huge. And you mentioned it earlier. You and I were talking. I'm trying to remember who it is, but I heard an advisor say during a presentation one time they fire a client on their birthday, sort of their birthday present to themselves. And there will come times where you have to fire a client. I will say that that should not be a joyous occasion. It should be an opportunity to go back and evaluate or reevaluate your onboarding process, right? And who you're accepting, which you've mentioned. I've always felt like having to fire a client was a prospecting problem, not a ongoing service problem. So
yeah, definitely. And since then, this year, I implemented a new questionnaire that I have to talk to prospects. And basically, when we go through that questionnaire, I know immediately whether or not we're a good fit. And if I can't tell by the end of that meeting, I usually don't take them on. I just say, hey, like, go back on XY Planning Network and find somebody else. Just because if I don't know immediately, I'm not going to take the next step, because the next step for me is a 2-hour-long meeting with clients where we go through all of their goals and like what their assets and their situation looks like. And that meeting, it's an expensive meeting for me. So I don't just let people have that meeting anymore.
So what is it that you see? Is it income? Is it assets? Is it, sort of what they say their needs are? What do you see on that initial sheet that is the telltale sign of whether or not they're going to be the right fit?
Yeah, I always ask just kind of basic information about their family, where they're from, where their siblings are, whether or not they have to travel to see their siblings, just getting them talking to hear about things. And then the three main questions that I think really are eye-opening are like, why financial planning now? Like, what's bringing you here now, and what can I do to help you? And then the other two are, what are your most important financial concerns? And then what are your most important non-financial concerns? Because those two questions really are generally pretty eye-opening. And if somebody is willing to open up on a meet and greet call with you, it means that they already have some trust for you. And if they're not willing to do that, like, they might not necessarily be a good fit for me, because a lot of my practice is about really digging deep and going into what's going on in your mind in addition to your finances. So if I feel like there's already a block in the meet and greet call, like, it's going to be really hard for us to go forward.
Okay. So it's really about that openness and willing to share and explore what it is that they're looking to do.
Yeah. And it's one of the reasons why we could talk about what my fees are, but my fees are pretty high at this point, because I do spend a lot of time with my clients, and a lot of it is, I'm not a therapist or anything, and I don't intend to ever be my client's therapist, but it is a lot more kind of coaching rather than just standard financial planning, because I ask my clients a lot of questions, and I make them think a lot about what they're doing and why they're doing it. And the only way for anybody to have any kind of change is first accepting that they're doing something that they no longer want to do, and then noticing it when they're doing it, and then actually trying to make changes after they've done the acceptance and noticing. So if they are already feeling really reluctant to doing that before we've even started doing the work, and we're not going to get the results that my clients typically get.
So what is your current fee structure? New client coming in off the street, how much do they pay you for financial planning?
Yeah, sure. So I have two different service models. One's called the Financial Freedom Plan, and the other one is called Goal-Oriented Portfolio Services. They are both based on the same flat fee. So it's a flat fee based on net worth. It starts at $7,500 starting in January. I'm at $6,500 now, but I'm raising in January. And then it's just 60 bips of net worth. If they're in financial freedom, they pay that over the course of 1 year. If they are in goal-oriented, then that means I'm also managing assets, and they pay that as an ongoing fee, and we reassess net worth annually.
Okay, so it's $7,500 minimum fee, 60 basis points. So they're doing math. I had 1.2, 1.3 million in net worth as the crossover points, something like that.
Yeah, exactly.
And so up to that point, it's just that 7,500. When they go to, when they hit that break even and they go up, then it's just a calculation of 60 basis points.
Yes, that's right.
All right. And so the one service is sort of a one for the year. So it's sort of capped, you're going to work with them for 1 year. It's, let's call it 7,500 for the year, or it's 7,500 a year ongoing if they want an ongoing service.
Yep, exactly. Yeah. And if they want tune-ups in financial freedom, if they wanted to come in for an annual review, something like that, then it's just a quarter of the fee. So $1,875.
So if they just want to come in for one meeting, you're charging them for the quarterly fee.
Yeah, because I give them 3 months to talk to me, have a meeting, get anything done that we have to get done in the plan over the course of 3 months, and then send them on their way.
That is awesome. I love that. I'm so anti-hourly because it's so hard and transactional, and people sit down with you for an hour, and I just don't feel like you get paid for the value that you're providing. But that's a really cool way of, being able to provide a smaller, more bite-sized service that people can opt into if they're not looking for that ongoing relationship, but you're getting compensated for the value you're providing.
Yeah, definitely. And so I know this is something that, Maddie and I have been talking about it, because I did have the monthly retainer model in my service, and we could talk about what clients are on that and who's not. But I had that in 2017, and I really gave it a fair shot. And it's one of the things that I think people need to recognize is that if things aren't working for you, you have to charge a way that feels authentic to you.
Yeah, absolutely.
And yeah, it just wasn't working for me. And I ended up just in relationships where people were trying to figure out how to get one less month, or try to get out of the relationship somehow. And maybe it was because I wasn't putting the value across the table that I should have been. But that said, I feel like the way I'm charging now is just really indicative of how I want to work with people, which is the initial plan, it just takes a year. It really does take a year to get in place, to get the plan going, to get the client actually doing the work that they have to do, and then start working on the behavior change. And hopefully at the end of that year, like they feel confident enough to be doing it on their own. And then they just check in when they need me, which is the whole hope of the program, is that they don't need me indefinitely.
Yeah, you bring up a great point. It's something we've been working from a branding perspective, is sort of shifting the messaging away from, charge a monthly fee or do a monthly service, because we've never wanted anyone providing monthly services. We've really wanted, what's the annual fee? In your case, it's $7,500. And it is an annual service that over the course of the year, here are all the things you're going to be doing. And this is how much you're going to charge for it. And, to make it more convenient for clients, you charge on a quarterly or monthly basis. Now, that being said, there may be some interesting psychology for certain clients around just the fact that they're paying monthly versus paying quarterly may introduce some, not ideal conversations and that sort of thing, which, I'm totally on board with you that I think you need to be authentic and it needs to work for you and for your client base. My thing is just don't tell me clients won't pay for planning because they will. And don't tell me they're not rich enough or they don't have enough assets for you to make any money, because they do, because they have income, just not assets necessarily sitting in an investable account waiting for you to manage it.
Yeah, for sure. I totally agree with that. Clients absolutely need planning and they can afford planning and they will pay for planning. Like everybody who has come in as a client, they come in because they want planning. They don't come in because like they need some sort of hotshot financial advisor that's going to like put them in the best mutual funds, quote unquote, and then, sell them on a bunch of stocks.
So you mentioned that, primarily based on net worth, we do see a lot of net worth plus income. Did you consider some other ways of calculating this fee, or did net worth just really feel right for you?
Net worth has always felt right for me. Income, I didn't really want to add. So one of the reasons why I set my minimum fee the way that I have set it is because like you basically have to have a certain amount of income to be able to afford that fee. And that's sort of how I've ended up where I have without having to charge based on income.
Okay, makes sense. So I guess what are some of the things that you're working on now, given your income is ramping, the clients are coming on, what are some of the programs or pieces that you're working on that, are working for you and that you want to expand on going into the next year or two?
Yeah, absolutely. So I launched a podcast, I guess it's a few weeks ago now, and it's called Money Owners, and feel free to check it out. It's just me talking about your brain and your finance. And they're a little bit short. I didn't realize like how much content you actually have to be talking by yourself in a room, staring at a wall.
Really hard. That's why I do interviews.
Yeah, for sure. So I was thinking maybe I'd get some other advisors on or planners on to talk about stuff. But in the meantime, it's just me. I've been putting it out every other week. And really the idea is like to get people thinking about their decisions. So it's the thing that I find most interesting about my business and about working with people is just like the basic idea that our thoughts cause our feelings and then our feelings cause our actions. And then we have results based on just those three things. And it's one of the things that I find really interesting because people always think that it's their circumstances, it's the things that are happening to them throughout their lives that cause them to feel and act a certain way. But it's really not, which is actually, I think, a breath of fresh air and should be reassuring to people because it means that you have more control over your life than you actually think. So something so basic as like, I don't know, I hear this all the time from my clients. So I'll just use this as an example, which is like, I need to own real estate. And I hear this because like, especially in New York, like it doesn't necessarily always make sense for a client to buy real estate, but they've heard since they were a kid that like they have to own real estate. And if they don't, they're throwing money away. Or you can put like, excuse me, 1,000,001 different like thoughts on just that one statement of needing to own real estate, right? But it's not the real estate itself that's causing all of those feelings and thoughts. It's just what you're thinking about owning real estate that's making you feel a certain way and making you do certain actions that are causing you to maybe feel guilty about the fact that you haven't saved enough already for that real estate or any other slew of issues that come up when you have a thought about something going on in your finances. And it could definitely be applied to anything really in your life, but because like obviously I work on people's finances, this is what I talk about. So my podcast is going to be geared towards talking about those issues and changing the way that we think about our circumstances.
So what caused you to start a podcast? I mean, obviously I'm a fan, but why podcast instead of some other, marketing medium?
I don't know. I like the sound of my own voice. I'm just kidding. Yeah, I guess it just felt really natural as a good way to get my point across. I feel like I listen to podcasts quite a bit and I do it when I'm driving or when I'm doing laundry or when I'm really doing anything where I have like a little bit of extra capacity to listen to something, but I don't necessarily sit down and read a really long article all the time or like watch videos or really anything else because I don't like to be sitting and looking, right? Or I don't need to like pay full attention. And a podcast feels like something that's really easy. There's also like something about somebody being so close to your brain talking about something when you have that little earbud in. I don't know, where like it really hammers the point home.
So one of the things I did not ask about, but that was just the explosive growth of new clients that you had, sort of that 2017 timeframe. But really now, I mean, you've been growing steadily. The assets are definitely growing. Number of clients are growing steadily. Like, where are the clients coming from? How are they finding you? Sort of, what are your effective marketing platforms at this point?
Yeah, sure. So I don't do really any marketing with the exception of this new podcast that rolled out. And I feel like I'm not the right person to ask about this. So 70% of my clients have been from referrals and the rest have been from a couple of people come in from XY Planning for sure. I've had a couple come in from NAPFA. And then I had one client come in from LinkedIn, which was super exciting because I feel like I don't do anything on LinkedIn. So, but yeah, I would say like 70-30, like referrals versus internet.
Yeah, I mean, client referrals works really well when you've been established for a while and have a lot of clients, right? That's usually what we see. So you're seeing client referrals a lot quicker, I think, than most would say to hope for, much less expect. So is it really just some of those early clients or just referring clients? And so it's been, that ramped up a little faster than it does for other advisors?
I like to think that I'm really good at what I do. And I don't mean that I don't mean to be really arrogant on this podcast, but I've found that clients go through the first set of meetings with me and they're very impressed and they talk about it to their friends. And so what ends up happening is that a client ends up coming in, I maybe only had 1 or 2 meetings with them and they're already referring somebody because they were so excited about the experience that they had. So I would say like for advisors out there who really want to be more referral based, like make that like that long meeting where you gather clients' information, make that really special because like I had one of my clients say that it felt like a wedding gift because her and her fiance were getting married a month later and we had their first meeting. And like she was so happy about how the meeting went and what they were able to talk about at the time and then what they were able to talk about afterwards that like she called it a wedding gift. So I feel like it's a lesson for planners out there who don't feel like they're getting the results that they want, that like you can change how you run your meetings, what you talk about in your meetings, how you make it really more about the client and less about what you do.
Oh, I love that advice so much. We get stuck thinking like the way we're doing it is the way we have to continue doing it. And the truth is every prospective client, it's the first time and the only time they're going to have that meeting with you. So it can be different every single time until you sort of find what works and what resonates. I agree that we sort of get into a rut and don't really think about like, all right, how do I improve this meeting? Which, my hope is that the meeting is always evolving and always changing and getting better.
Yeah, for sure. I couldn't agree with that more. And mine definitely has evolved, even though it's become something that's really good and people look forward to. Like it keeps evolving and I keep asking or changing the questions based on feedback that I'm getting or what I'm seeing with clients. And I would say I've been in business now since 2014. My business has changed so many times and I've only been in business for 4.5 years. So it just means that like if something's not working and you're a small business, like that's the best part about being a small business. Like you can change it immediately. Like you can change it within the week. You can change it that day if you want to, depending on what it is. So like just be willing to be flexible and know that you're not right. Like I feel like I'm not right now. And I'm sure that there are things that I'm doing now that in 5 years from now I'll be like, oh, I can't believe I did that. That was really, that was silly for clients. What I'm doing now is so much better. But I mean, that's kind of the thing is like, if you're willing to evolve within your practice and you're willing to change how you do things, how you charge based on how you're doing things. If you look at what other people are doing and you decide that maybe something there would fit into your practice, like by all means do it. But I would also like be a little cautious about taking stuff from other people just because if it doesn't feel authentic to you and you're not able to talk about it like you would be talking about anything in your life, then it's not going to feel real to a client and they're not going to want to sign up with you.
Now, you said you do a 2-hour introductory meeting. I've seen 15 minutes, I've seen 30, I've seen an hour. I've never seen 2 hours. So talk to me about what that meeting entails. Like, is it really just a get to know you meeting and it's structured out for 2 hours? Or are you accomplishing some of the financial planning recommendations and data gathering in that meeting? Just like, talk to me about the structure of that.
Yeah, sure. So initial meeting, like a meet and greet call is 30 minutes. It usually doesn't go the whole 30 minutes. It's usually somewhere between 15 to 30 minutes to fill out that questionnaire that I've been talking about to screen out clients. From there, they get the option to have the 2-hour meeting. So we already kind of know a little bit about each other by the time we have that 2-hour meeting. At that 2-hour meeting, we spend 45 minutes to an hour of it going through a goals-based questionnaire that I have. And really like, the questions aren't just like, what are your financial goals, right? Like, which I feel like maybe some people are doing where they just walk into a meeting and they need to know goals. They have clients list them out. Like The questions are designed to get the client talking about things that they want to do in their life. And then I come up with the goals for the client. And I come up with the goals and then I say to them, hey, do these goals resonate with you? Are these what you had in mind when you told me all of these things? So it's really about like taking information that they give to you, being really open and candid, holding the space for your clients, making sure that you're listening, taking like notes on things that actually matter, but not just writing down everything because you're afraid you're going to miss something. So it's really, I would say like that's something that definitely comes with experience for sure, but something that any planner can implement in their discovery meeting. And then the remaining like half hour to hour long stuff is just like the regular data gathering stuff that you have to do with clients.
So are you using any particular program like Kindersleuth questions or something like that for the questions in terms of trying to get your clients talking, or have you come up with these on your own?
I've come up with them on my own. So some of them for sure, like I've read some of Kinder's books. So some of them like they're adapted from Kinder, but a lot of them are just like, they're just focused around people's lives and what they want to do in their lives. And they're open-ended questions. So I never ask yes or no questions from clients just because like that really closes off the conversation. Usually try to use like a question, like a what question to get them talking. And then it's less defensive if you use the word what rather than why are you doing that? You know, like just try to be, and I try to be like as open-minded, and I don't judge anything that my clients say. No matter what they say, I don't judge what they say because I don't want them to stop talking.
So 3 tips in there. Ask open-ended questions, which is brilliant. Don't ask yes or no questions because it's really hard. Ask questions with a what instead of a why. Or said another way, I've also seen this, like don't ask questions, make statements. Like tell me more about that situation, as opposed to, you know, sometimes it helps people sort of relax those defense mechanisms. We don't like questions. They're uncomfortable. And then the third one was don't be judgmental. You know, you got to sort of leave your bias and prejudice at the door because what's right for one person isn't right for another.
Yeah, I would say that's the number one thing that you should take with you throughout your relationship with a client is like, you don't get to tell the client what they do with their life, right? Like I have a million things that I think all of my clients should do all the time that would make their life quote unquote perfect, right? But it wouldn't, because it would be my life. It wouldn't be their life, and it wouldn't be the life that they want to live. So like just because we have all of this knowledge from the CFP and we know what we're supposed to be doing doesn't necessarily mean that those things are right for the client.
That's what I love telling students, where I'm just like, I know the case study that you have always works out perfectly, but what are you going to do the first time a client says no? Or just doesn't do it, and you keep telling them to, and they just won't do it. What are you going to do then? You know, and it's always this like realization of like, what, that happens?
Yeah.
You know, you mentioned earlier that you do a lot of work with behavior change, and I feel like this is the part of financial planning that is coming along so fast. And it's also been the challenge, I think, for advisors that have been in the industry for a long time that are accustomed to working with wealthy individuals that already have good money habits and behavioral patterns around money, to when you work with younger people, they just don't have those in place yet. They still need to develop them.
I would argue about the older clients that they have habits that are in place, but they're not necessarily healthy. And sometimes they've just managed to make more money than their problems are.
That is a very good point. You know, I just feel like when you're working with younger clients, like behavior change is the center of the relationship, right? And it's not trying to modify someone. It's trying to help them develop long-term habits, you know, in order to be healthy financially. So what are some of those conversations and things that you're working with your clients beyond just, you know, here's your retirement plan? How are you helping your clients actually develop the behavior that's going to help them be successful?
Yeah, that's a great question. So one of the major things that I always talk about with my clients are what are the things that are really important to them in their life right now? And you can ask like the Kinder questions if you want to get that out of a client. But usually I get from clients that they want to be with their family. They want to be more present with their family. They want to do amazing things with their family. That's just who I work with, are family people. So I'm sure if your client demographic is different, you'll get a different set of answers for this. But from there, it's like, okay, well, how can we do that? And how can we do that in a way that fits within the confines of your finances, right? Because like, of course, like, wouldn't it be great if we all just took, you know, a couple of months off and went to Tahiti with our clients, with our kids, and did whatever we wanted and everything would be great, except that like that would bankrupt probably a couple of my clients. So like the idea is to figure out like how you can fit that into their life. And then, so if they want to fit these things into their life, then what other things are they willing to sacrifice so that they can do the things that they really love? And how can they sort of control the expenses that seem like they're necessary, but they aren't necessary. You know what I mean? So one of the concepts I talk about with my clients quite a bit is like the idea that like your food is not your entertainment. Because like I see this all the time in budgets where like the dining out budget is just outrageous. It's like 15 plus grand per year. Some I've seen it as high as 30 grand a year. And like that's okay if like that's how you want to spend your money. But usually people are like, oh, like I don't even really enjoy going out anymore because we go out so much. So like at some point there's diminishing marginal returns. And like, are you going out because like you really like the food and you're a foodie? Are you going out because like this is the only way that you think that you can spend time with your family? You know what I mean? Like it's starting to think about like how we're doing, like why we're doing the things that we're doing them, how we're doing them. Are we doing them just because they're a habit? And how are they all playing out in our financial situation?
I love the way you're framing that. I think those are the conversations that are, again, we're not exactly taught how to have those conversations. You just sort of have to learn by doing. But those are the conversations that you get to have when you work with, younger clients that, again, may be overspending. There are a lot of advisors out there that when that client walks in the door, like they would never get past the prospect meeting. Right. It's just like, oh, nope, you're an overspender. I don't deal with overspenders. And that's their prerogative. So when in the pre-call, we were joking because you said you had always wondered how to get on the podcast. The answer was you just have to ask. Sean Tidlaska had actually recommended you to be on the podcast. And one of the things that he mentioned in that was that you are a mom, and you mentioned your husband earlier. And he said that you, from his understanding, do a wonderful job of being able to balance it all because you're running a successful growing business and also spending time with family. So I guess the first question is, do you feel like you're successfully running it all, given everything that's on your plate?
That's a great question. I think you should ask me that in the morning and I'll tell you yes. And if you ask me that at 10:30 at night, I'd be like, hell no. What am I doing with my life? No, my husband and I joke about that all the time because like in the morning, I'm like, everything's great. I got all this going. I got this. I got that. I'm going to hang out with our son. I'm going to do this. And then at nighttime, I'm like, why am I doing this? My life's terrible. But it's really not. My life's pretty good. So yeah, I have an 8-month-old at home. I actually want to give some advice to some women out there who feel like they can't run a business with a family or they're thinking about getting pregnant. You can do it. And your clients, if you have good relationships with your clients will be over the moon for you that you are pregnant, that you have a child, that you have a family, that you can share photos with them and share in all the experiences that they have. Like once I became a mom, I actually understood a lot better, like why people spend money on their children, right? Because like, it's an amazing feeling that we get when like it's something that Elizabeth Dunn talked about, where if you spend money on other people, like it makes you feel really good. And that's definitely something that happens to all of my clients and something that I've certainly felt as well. And there are ways to do it, right? Like the whole reason why I started my business in 2014 is because I knew I wanted to be a mom. And I thought like if I just could get 3 years under my belt, then I can have a child and my business will sort of be humming along because those are kind of the statistics that after 3 years, like things are happening. And I don't know necessarily if that was the right decision. I think like when you're a business owner, there really isn't any good time to have a child because now I'm busier than ever and I'm handling more prospects than ever. And I'm looking to hire and expand my firm and that kind of a thing. And that's like a whole other, we probably do an entire podcast on what's going on in that front. But like things happen the way that they happen. And there's nothing that we can do about that. Those are just our circumstances. But the way that we think about them and what we do with that information is really what makes things great or makes them bad if you have bad thoughts about them, of course. But like, I think that my attitude about things in general has made me successful and made it possible so that I can spend time with my son and I can run my business and I can do all the things that I want to do.
Yeah, when we look at the gender breakdown based on age at XY, it is really interesting that the percentage of male to female is much higher in their 20s and 30s. And then in 40s and then going into 50s, it isn't even, but it starts to get a lot closer. And anecdotally, our sales team, feels like it's because they do have a lot of conversation with women. They're like, oh, well, I'm we're thinking about starting a family. So, I'll basically be back after the kids. And yet, like I've had a dozen guys on the podcast that literally started their firm like while their wife was 9 months pregnant. And I don't mean that to be a judgmental thing, but it is a recognition. I appreciate you saying that because it means a lot more coming from you than from me. to the women that are out there, they're like on the fence about starting, and they really want to start their own business. They have the finances in place and they have the experience and they have all of the success pieces, but they're like, oh, but I want to start a family. It's like, those don't have to be mutually exclusive. You can do both.
Yeah, for sure. And I would also say, like, I always thought, oh, well, you have to have your spouse or somebody in place to help you out with your finances. And that rang true for us for sure. But this year, my husband also started his own business. So
hey, dual entrepreneurs and an 8-month-old.
Yeah. So I used to think like, oh, well, you definitely need to have your spouse working that W-2 job. That way you can get health insurance. You can do all the things that you're supposed to do. You have a steady stream of income coming in. That's not necessarily the case either. I think like you just have to be really good at controlling your personal costs. And that really rings true regardless of how you, like, when you start a business. It doesn't matter if you have a kid at home or not. You have to control your personal expenses, and you also have to control your time. Like, you can't just spend time on anything willy-nilly just because you think like it'll help your business. You really need to, like, that's the one thing I think that I've been able to do the most is since having a child, like things that used to take me 3 hours take me 1 hour, things that would take me a week, I could do in a day. Like, just because I have to, there's no choice anymore. I can't just like mess around or waste time, clicking through email or spending time on Facebook or any of these other places that we waste our time. Like, it's just that time's not there anymore. And I don't have it.
Yeah, there's a theory called Parkinson's law that tasks take us as much time as we allot them. So to your point, if you have a week, it'll take a week. And if you've got a day, it'll get done, and
so
we find
true.
things get done. And I remember back in college, it's like that the professor extended a deadline by a week. It wasn't like you started that day. You waited a week and then got started. We know how this works.
Oh, yeah, for sure.
So
Absolutely.
Either, accepting that you're going to have constraints, or if you do not have some of those time constraints, creating artificial time constraints is a recommendation to be sure that you go ahead and get it done in a day and you don't take all week to knock it out.
Definitely. Yeah. I would say one other thing is like, I think a good characteristic that would describe me really well is durable. I like put myself through the ringer all the time. Like one of our fellow XY members was telling me, he's like, I don't even understand like how you're doing it. Like, you run your business. I just launched a podcast. I'm trying to launch a coaching business as well. I have an 8-month-old at home. Like, I don't know why I do these things to myself. Like, I do them to myself because I'm like a durable person and I get through it. And when I get knocked down, I pick myself back up. And I think that that's a really important characteristic to have, or if you don't feel like you have it, to foster it, because that's, I think, the only way that you get through being an entrepreneur.
This is an emotional roller coaster. Listeners have heard me say that time and time again. The quote from Jude Boudreau, the highest highs and the lowest lows all on the same day. Even when things are going really well, they're stressful, and they just are. And whether, no matter where you are in terms of, family dynamics and running the business, what all you're doing, like, I don't meet very many bored financial planning business owners, right? I don't meet very many bored entrepreneurs because it's just what we do to ourselves, and that's what's fun.
Yeah, for sure. And then regarding like maternity leave, I'm sure some women business owners are interested in this. I think I did myself a disservice. So I was like very manic after my son was born, and that's like a side effect of giving birth apparently. But I had like this mania for 2 weeks where I literally like got everything done. I like gave birth. I was taking care of my son. I was like running around doing stuff. I had an emergency C-section. So like I really wasn't supposed to be doing the things that I was doing, but somehow found like the energy to do it. And I think I kind of set a bad example in doing that. I mean, I don't regret anything that I did. And I think that like it certainly helped my clients to know that I was still around and available for them. But I know that my clients expected me to take that time off. And I had prefaced my maternity leave with like, hey, I'm really not going to be doing anything for a month. So like for me to check back in so quickly, I think like kind of negated all the stuff that I had said to begin with. And I think like my clients really would have been understanding and were understanding the entire time that I took. I did take quite a bit of maternity leave, to be honest. Like I did only video calls after a couple of months, and I did field emails from people, but I did it on a delay. So like I didn't totally take time off. I like took some, like a whole month of really kind of off time. But I think I probably could have been better about prioritizing my family a little bit more at that time. But to be honest, like as a new mom, I felt totally incompetent at being a new mom, and I felt super competent at being a business owner. So you kind of like fall into what you're good at. And I think like the second time around, because we definitely plan on having a second kid, I probably would take a little bit more time.
It's a great recommendation. Take care of yourself, which is hard when you're, especially when you're a solo business owner, you don't have a staff. with my most recent baby, which she's 14, 15 weeks old at the time of this recording, like I was actually able to step away from the business for about 6 weeks. I still stopped in the office and meddled just because I live down the street, but like I could do that in a way that I couldn't with my first, with my son that's 4, and just the business was newer. There weren't as many people. So some of it is life stage and sort of where you're at. But yeah, take that time for yourself as much as you can, and like you said, your clients will be okay. And if they're mad at you about maternity leave, like good, fire, like let that client go, right? Those are the types of clients you want to get rid of because they're such a drain.
Yeah, for sure. I would also say so I was due February 14th. My son arrived on February 12th. About like a month leading up to that, I stopped taking any kind of prospect meetings, obviously, because like the process takes really long to onboard somebody, and I didn't want to be onboarding while I was like in delivery. So I kind of had a hard stop mid-January of like, I'm not taking on any prospects anymore. I still took calls, but what I did was I said, hey, like I'm about to give birth. So like you can wait until April or May when I'm willing to take on new clients. People waited. So I think that that's something like definitely not everybody waited, but there were a handful of people that waited and said that I should reach back out when I was ready. And a couple of those people did become clients. So I think it's a good lesson that like, whether you're pregnant or if you even have like a family emergency that you need to attend to, like people are, if they want to work with you, they're willing to work with you on your time, and it doesn't necessarily have to be on their time.
Yeah, that's a great point. So last topic, and we're at, we could talk for hours about all this stuff. Last question I have for you was around growing. So you mentioned that you're looking to hire. So have you made the decision that you want to grow and expand the firm beyond just you? Is that a decision that you've sat down and made, or are you just feeling like it's just time?
So I'm not 100% sure about whether or not I want to bring on an advisor. I am at a point where I do need a paraplanner. I have hired a virtual assistant, my client support specialist. My clients are aware of her, and she does have some contact with them and has helped them through things for sure. And I hired her actually before I gave birth on purpose so that I would have somebody as sort of a backup within my firm. But I didn't utilize her properly back then. And if I could go back in time, I would make some changes and I would have handed off more stuff, but I just wasn't ready to do that at that time. I'm definitely in that place now and have been handing off a lot of the repetitive tasks and things that she can do so that I can either free up my time to hang out with my son or like free up my time to do legitimate client work that I get paid for. And then I do need a paraplanner, and it's something that I didn't really want to do. I always thought that I would continue to do all of the financial planning myself. But I'm realizing that that's not actually my value add. My value add is certainly to check those numbers and to make sure that the plan is correct. But my value add is me being in a meeting with clients, talking about those numbers, and then helping with behavior change.
So do you expect to hire a full-time paraplanner? Are you thinking a part-time virtual paraplanner? Like what's the model that you're thinking at this point?
Yeah, I'm going to start with a virtual part-time paraplanner and then see how the role evolves. So the number one thing, like my biggest goal for 2019 is to get all my standard operating procedures in place, start systematizing things, and really be as efficient as possible. I feel like I'm in a place with my revenue right now. Like I'm expected, if I don't take on anybody new in 2019, I'm expected to be making grossing 180. So I'm in a really good place to like maybe like slow down a little bit, get all my systems in place, and then see like how I want to grow from there. Or I don't even really have to grow. I can just always have a part-time paraplanner on staff and take on the amount of clients that I want to have and run it as a lifestyle business. I think that's kind of like the beauty of our business is like, I can run a lifestyle business, for 10 years and then all of a sudden decide I want to grow, right? Or I can decide tomorrow that I'm ready to grow and that's it. And like put all my time and energy into doing that. So I'm sort of still on the fence about that, but I definitely know that I need help.
It's one of the more unique things about our business is that you really can run a very successful business working as many hours as you choose. I mean, we've had people on the podcast that work 10 hours, 20 hours, 30, 40, 50 a week, and like some people are growing, some people choose to stay just them and hire part-time. Like you really can build it however you want, which is what's so cool and unique. And to your also point, the way that you decide to build it today doesn't mean it has to be the way that it's built forever. And so, when your kids are older and you said, all right, like I'm ready to ramp now, you can just turn it on. You could just choose to do that, which is so cool. It's not like you have to sell the business and go start a new one.
Yeah, for sure. So, which is fantastic. And it's honestly like being a business owner is the best, right? Like if I lose a couple of clients, like I still have revenue from other clients. So it's not like all of my income is dependent on one person. I make my own hours. I hang out with my family when I want to hang out with my family. I just took a 2-week trip to Seattle because I have family out there, and I got to hang out with my sister and my nieces and my brother-in-law. And like, I did a little bit of work from there, but I also like legitimately took time off. And like, that's how I always envisioned my work life would be. And I kind of joke around with my clients about it because like they all are into like financial independence, retire early type stuff. And like, I feel like I'm already retired early because I love what I do and it doesn't really feel like work to me. And the stuff that feels like work, I'm ready to outsource.
I love it, which sort of goes, that'll play into my final question. You know, you're 4.5 years into the business of running your own business. You've now hit that point of just like, I guess you can sort of breathe a sigh of relief, like you've made it, you're here, things are good, you're not looking for another job. If there was one piece of advice that you could go back and give your younger self, you know, one thing that you learned that you wish you would have known then, what do you think that one piece of advice would be?
Oh my God, only one, Alan?
Only one, because I know you could get 100.
I could talk to you for like 3 hours about this. I would say number one piece of advice I would give myself is be more tactful. I think that I sort of went through a lot of my early career just feeling like I could get noticed because I was doing great things. And that's just not how the world works. Like, you need to learn how to interact with people, and you need to learn how to interact with people in a way that they want to be around you. And that doesn't necessarily mean that people didn't want to be around me back in the day, but I just feel like I could have been better about forming relationships with people. I could have been better about how I interacted in a work environment. I could have been better about being a little more humble and being a team player. And I think that all of those things are definitely things that I've learned now and have changed how I interact with people for sure. But it wasn't always like that. And I think that one of the reasons why my career took the path that it did is because like I really was sort of the behind the desk numbers person. I really didn't have like the kind of rapport with people that I have now. And that was something that I really had to learn along the way and learned as a result of starting my business. So if I can go back to younger me, I would be like, go take a Dale Carnegie class and get people to like you.
Oh man, you are so speaking to me even now, but definitely younger, you know, just sort of an abrasive asshole sometimes. And I have certainly tried to soften that as well. But you know, it's a good point that being likable does matter. You know, you can get a lot of things done on your own, but it's a lot easier to get things done when you've got a team behind you of supporters.
Yeah, for sure. And being likable is something that's important, I think, regardless of whether or not you're working. Like, doors open for people who are likable. And it's something my husband and I talk about for sure, that like we want to raise kids who other people like being around just because like that'll help them in their life.
And it's so true. Awesome. Well, Morgan, thank you so much for taking the time to come on the show and share about your career path. I'm so excited to continue seeing you grow and what all you're going to be working on. So thank you so much.
Yeah, absolutely. And I'm happy to come back on anytime. So just let me know.
All right. Well, we'll see the votes that flow through to my email for having you back on. So. Fun fact, what do many financial advisors have in common? They're often terrible at doing their own bookkeeping, and more importantly, they don't enjoy it. Enter the Bean Team at FA Bean Counters, powered by XY Planning Network. There's no shame in falling behind in your books. We're all guilty of that from time to time, but if you're leaving money on the table because you haven't filed expenses correctly, you need the Bean Team. Start cleaning up your books with a free chart of accounts template. Visit www.fabeancounters.com/XYPN radio to download your copy today. Be sure to join our VIP community at xyplanningnetwork.com/VIP to hang out with other XYPN radio listeners, ask questions for future mailbag episodes with myself and Kitsis, and to finally find a community of like-minded financial advisors. Thanks so much for joining me today. We'll see you next time.
You're not alone, and you're not crazy. It's scary starting, building, and growing your own financial planning firm. And that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.